Hey, welcome everyone to a special edition of Story Trading. We got Stephen Humphreys from Identiv here. First, a quick disclaimer. Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. This event is being recorded. It will be made available to our VIP members for a period of 7 days, and then we're going to be uploading that to social media. If you don't know about Story Trading, head over to our website, sign up for our app, and learn all about us. We got lots of VIP picks. Identiv INVE was presented as a VIP pick. We'll get into that. There it goes. There's Identiv. It was presented on June 7th, 2020 at like $5. The stock's up 360% since then. Stephen, the CEO, has been with us several times, and along with some other management at some point was here. So anyway, I wanted to invite you back, Stephen. Oh, first, quick look at the chart. You can see that. And what we try to do at Story Trading is understand the price action and predict the future price movements by collaborating together to learn about fundamentals, sentiment, catalysts, and technicals. So with that, I'm going to stop my share. Stephen, I invited you back because you are a man of your word, man. There's nothing better I like than credibility. And through these 2 years that we've been following you, you keep on executing, you keep on beating revenue, you keep on raising guidance, and that's just awesome. And there's been so many catalysts and news updates and deals in the last few months. So we wanted to bring you back on to give us an update on everything that's going on with the company.
Yeah, no, thanks very much, Ben. And stock performance is generally a reflection of business performance, and we're just very fortunate to be in a great market at a great time with some historicals that have cleared out a lot of competitive barriers. So we're very fortunate to be growing fast in a market that's nearly unbounded and to be a pretty clear leader in it. So. I wish I could take credit for that result, but it's actually the business that's cranking along. I mentioned we're here this week for our sales kickoff, which is why we only have a half an hour today. But the excitement inside is as much or more than you see outside in the investor community.
Great, that's awesome. I see the two most recent, at least there's been three deals recently published, but the ones that caught my eye was CVS. Which we knew about. You've been talking about this technology with CVS for a while, but it looks like it's being expanded on a bigger scale. And then this cannabis deal. So if we could start with the update on those two, that'd be great.
You bet. CVS, we've been working with them for a couple of years, and they've been kind enough to let us disclose it, but they actually hadn't launched their press push behind it until just in the last couple of months. They wanted to get all their pharmacies deployed. They want to be sure their pharmacists really liked it. And now they've really launched it full bore with the CVS marketing machine behind it to all visually impaired customers. And so as anyone who's heard us before knows, this is a use case in which one of our RFID devices gets put on every prescription bottle. You just tap your phone to it. And if you're blind, instead of trying to figure out what bottle you've got in your hand, it'll say, this is Steve's Lipitor, you take it once a day, this is the dosage, et cetera. And then their vision beyond that is actually pretty expansive. They want to expand it to all prescription recipients. So all those drug interactions, and if you miss taking the pill a day, it'll automatically tell you, hey, don't take this double, or do take it double. If you skip a day, you should be taking this with food, et cetera. All those things you don't read in the circular. So they've really got a lot of plans for it. We also think that with their launch and their publication, that'll kind of force most pharmacies to comply, because if you're blind and CVS will make it spoken and you can't get that through Walmart or Amazon or somewhere else, there's going to be a lot of pressure on them to get it. So we're pretty excited about the potential. That said, these things always do take a long time to deploy. CVS wanted to get it deployed in every pharmacy before they would launch it. And I would expect other pharmacy chains would do the same thing, instead of saying, oh, only if you're in Ohio, you can get it. So there will be some deployment time behind it, but I think long-term, it's going to become a pervasive use case.
Can you give us an idea on what the CVS deal, before getting other pharmacies, just CVS specifically, what this could mean for your company on the top and bottom line?
Yeah, so very simple metrics. There's about 4 billion prescriptions annually done in the US. About 10-15% of those are visually impaired, so 400 to 500 million. CVS has a little shy of 20% market share, so it's about 100 million units of visually impaired customers for CVS. We're selling these in the mid-teens to just shy of 20 cents a unit. So if every visually impaired prescription through CVS went out with one of our RFID devices on it, that would be in the $18-ish million revenue range. Our gross margins run in the mid 30%. And so, you can see what that would mean for the bottom line as well. And CVS, of course, as I mentioned, is only one pharmacy chain. If they're doing it, and we're certainly working actively with advocates for the blind and visually impaired community to say every pharmacy chain should be making this available to their customers. That then would make it all 500 million of those prescriptions. That'd be a market opportunity.
And are there any competitors that are trying to win these other pharmacies, or is it just a matter if they get it or not?
We certainly have the lead here, and for pharmacies, CVS, for example, deploys not just our RFID devices, but our readers. I've had them in prior story trading discussions that our readers are rectangular devices that connect to each pharmacist issuance station, and they program the tags with our readers when the prescription is issued. And so there's a fair amount of stickiness if we're the ones doing the programming of the tag and providing the tag. If you take someone else's, in fact, it will work. But if you're a pharmacy, that prescription is worth on average $100 to the pharmacy of revenue, and they don't want to screw up that experience. And so to save a few cents on the RFID device, it's unlikely they're going to go to an alternate source when we already do the programmers. But technically, they absolutely could. To be clear, we don't have a lock-in here, and it is open, but we're first mover. CVS was very open in their press release, identifying us specifically as the technology provider underneath it, which we were very grateful for that they were so proactive on that. So it's a competitive environment, but we think we have some advantages.
Oh, great. Moving right along, we don't have a lot of time. Cannabis, tell us all about that deal and what it means for your company.
Yeah, so cannabis has a couple of thrusts going to it. The big deal that everybody's been watching has been what's going on in Canada. We have always said that because of the bureaucracy and some other things going on, and also Canada is trying to do a lot with tax collection, that we thought there could be some first movers actually in the US that move faster, and that's actually what's happened. So a company called True Green placed an initial order for about 20 million units, all in the cannabis supply chain. And anyone who wants to do diligence can go ahead and call True Green directly, and they'll actually say that they think that's a fairly small number versus what they expect the opportunity is. So they think it's going to be a several 100 million unit opportunity. This is just in an initial couple of states in the US. And I think it's going to go more broadly because you really do need authenticity and tracking for cannabis. A lot of people think of cannabis as a recreational drug, but it's also used for medical purposes. And so making sure that you have the right type of cannabis, that it's from a certified producer through a certified channel is really important. And just like we're doing with the blind community, we're working with the medical marijuana community, which is the most active part of the whole cannabis movement, to really say, hey, anybody producing cannabis really should be validating that it is a trusted source, a trusted concentration, trusted content, so it can be used for medical marijuana. So we're pretty excited about it. And this was a very good first initial order with a very vocal provider of the technology.
Does 20 million units, does it have the same financial profile as the CVS ones?
Actually, only coincidentally, it's a totally different use case, of course, with authenticity and consumer engagement versus the spoken RX use case, but it's also in that 20-ish cent a unit range. So okay. 20 million.
And the same gross margins on that?
Yes.
Mid 30%.
Yeah.
Okay.
Yeah.
Cool. All right. All right, you had another deal here, jerseys, collect ID. What is that about?
That's also a very cool use case because now you're getting into the soccer space, but even more generally, Collect ID is a brand consumer engagement company, and so this is in particular a soccer, a football club that's putting it in their jerseys and their other paraphernalia, and then Collect ID has a whole platform whereby they will track the both authenticity and consumer engagement with those goods with the soccer club. And there's some other much larger soccer clubs in Europe that are looking at the same use case. And so we think this will be something that's going to really replicate. And there's actually one you didn't mention, which had come a little earlier, which is Corvo Tequila. And that also is brand authenticity, and we think is going to generalize across high-end alcoholic beverages.
Okay, can you give us some numbers on these two deals?
Smaller in the initial deals, a couple of million units for Collect ID, and similarly for Cuervo. But that's one football club. And it's a Latin American one. And so it's going to be a lot larger when you get to European and you go global. So you should think an order of magnitude to potentially 2 orders of magnitude more in terms of volume there. And again, similar price points because these are consumer engagement platforms that we're talking about.
Okay, cool. I know we have a list of some questions to get to, but I want to take a step back a little bit. If you could talk about the technology, because when I mention your company to some people, RFID, a common reaction I get is, oh, that technology has been around forever. It's really cheap.
Yep.
There's nothing proprietary with it. A lot of people have that initial reaction. What's your rebuttal to that?
Sure. So when people think of RFID, they typically think of UHF, ultra high frequency, and they think of things like retail hang tags that go on, undershirts in Macy's that are 3 cents each. That's not our business at all. We are in high frequency, usually near field communication oriented, highly secure application based solutions, and they're typically 1 to 2 orders of magnitude higher price points. So that's a way to think about it: high frequency versus UHF, and 20 cents to $2 versus 2 to 4 cents in the UHF space. So in UHF, you'll see companies like Impinj that sell chips into Avery Dennison, and they do 2 billion units a year of that. We use a few Impinj chips, but mostly we're getting ours from NXP, Infineon, TI, higher end devices. Nothing against Impinj, they're a great company and great products, but a different use case. They're in RAIN UHF RFID. We are in NFC based HF RFID applications.
And as far as IP, do you have any IP around that?
A range of patents around it for both technologies and use cases, as well as intellectual property. So, for example, RFID is very difficult on metal devices. And when you talk about some of these use cases, on bicycles, on motorcycles, on higher end things, you have tag on metal, and we have a range of patents on that. And metal, the same issues come with things like carbon fiber. So when you get to bike rims and other applications, carbon fiber has similar problems to what you have on metal, and we have a lot of IP around that. And then the main IP is around the software and antenna stack that goes along with it. So that's one thing that's important to clarify is the chips themselves, which can be very competitive. You do have Impinj, NXP, and others like that. We are customers for those companies, and then we incorporate it into a device. And our secret sauce is primarily on the analog portion of it all: the antenna, the RF, the power harvesting, and then how that then is converted into the digital data stack around it. So the customer experience is heavily driven by the analog aspect of the interaction, which is the part we do, and then the chips just provide the capabilities and the features that go with it.
Okay, great. I wanted to talk a little bit about the last 18 months or so. We started talking to you kind of in the depths of COVID, and you had some different products you were trying to take advantage of, with it was temperature sensing, it was some of the stadiums, I don't remember, hospitals or some stuff. So looking back over the last like 18 months, you keep on beating revenue, you keep on raising. And I know a couple of those things didn't come to fruition. So if you can summarize the last 18 months, what went right? What's really the driver behind all these beat and raises for you?
A couple of things. One is we do tend to have multiple initiatives because you never know which ones are going to hit. I mentioned CVS took 2 years to really start to take off. We have a big mobile customer that was 2.5 years in the making. And so you have to have multiple initiatives here. The fact that cannabis is now starting to hit, that easily could have slipped, plus or minus 6 or 8 months. And so the thing that has gone well is we had planted a lot of seeds really 2.5 years ago. And that's what we're seeing. Some of them come to fruition. Some of them, in fact, not yet, and they're further out. The other thing is we've got a really good supply chain team. So we haven't missed a single meaningful customer shipment commitment through all of this insanity. And that's, I talked to a lot of other CEOs that's not that common. That we haven't been impacted that way. We've had lots of issues and concerns, but we've always fought our way through them and got through it. And I think that's the fact that we have the opportunities, so we have some diversity of growth opportunity, and we actually deliver on every single one that comes home to roost. It's not much more complicated than that.
So what's the biggest driver of all your revenue? Is it the CVS? Is that like the largest portion of the growth right now?
Well, we don't have any 10% concentration customers, so it's a diversity. We've got a lot going on in the medical area. We do everything from RFID devices go into inhalers and breathing tubes, as well as in test assays, as well as in syringes, as well as the cannabis use case, as well as the CVS use case. Brand protection and customer loyalty is growing in a number of different areas. We talked about high-end alcoholic beverages, but there are a bunch of other areas there that is growing in. Mobility is growing. NFC has really been embraced, in particular by Apple. Most notably with MagSafe and everything else they're doing. But the Android community, of course, has been a big platform for NFC for a while. So the thing is, it's in multiple areas that's driving it. Overall, our RFID business is the fastest growth driver that we have. Our premises business, though, also has really been growing healthily and has very healthy gross margins. So we've been fortunate that we've had growth in all aspects of the business.
Okay, great. One thing that amazes me, I saw your IR department sent me some information on guidance, and you have guidance here of 130 to 135 million for 2022, which is 25 to 30% year-over-year growth, and you're already guiding out to 2023, which in and of itself is amazing for a small market cap. You're still a micro cap, a $500 million market cap, but you're already giving guidance. So you have like amazing visibility, 2 years out, which I love. But what's amazing is you're guiding, if I'm reading this right, for accelerating growth into 2023. Is that right?
Yes, we are. So just in the last couple of months of 2021, we more than doubled our sales team on the RFID part of our business. And we actually had been expecting to do that hiring over kind of through and into the first half of 2022. But we brought on some great leaders. They've attracted some amazing people, and we built that sales team much faster than we expected. So that was faster than expected and faster than we needed to do our 2022 plan. So we think we've got some upside on that because we have salespeople that'll be selling, at full speed throughout the entire year. And then similarly, some of these big projects, when you look at CVS and prescription drugs, and you look at cannabis and some of the other medical devices in particular that we've talked about before, any subset of those that hits, which likely will be really scaling towards the end of 2022, will contribute quite a bit in 2023. So just continuing the 22 growth rate would be a clear understatement of what we think the business machine is doing. We're not trying to overly forecast something just turning up by good fortune, but we've got a substantially larger sales force, a broader product line, and a larger number of design-ins that'll drive that growth.
So if I have the numbers right here, the 12 months trailing revenue is 100 million, and it looks like you're guiding for 169 to 182 million in 2023. I mean, that's pretty impressive. I'm glad I got the math right on that. That's cool to hear. I want to ask you, within that guidance, are you baking in it sounds like, with sales growth, but are there any additional catalysts that might be able to get it even higher above this top of the range 182?
There are some of these big plays. Again, if the pharmaceutical industry went, all visually impaired, starts to get RFID on them, that's a 500 million units at 20 cents a unit. That's $100 million right there. That totally transforms what the business is. If they go more broadly, as we think CVS at least will start to do, to all prescriptions, that's a potential use case of 4 billion units. There's a half dozen more like that, which we've talked about before with cannabis, with our auto injector project, with some of the high-end pharmaceuticals that's looking at our technology. So there are a half dozen or more that could. But again, the thing I do want to be very clear about is timing on these things can pause for 3 quarters at any given time. So we think we've got confidence in the numbers we put out there, but when we start to go well beyond those numbers, will be driven by some of these big opportunities hitting, and that's what can easily, some of these medical device companies, 9 months means nothing to them. So we just want to be careful about when even greater inflection points come.
Okay, can you talk to me a little bit about profitability, kind of with this big revenue bump? Are you planning on, I don't know what your cost structure will look like, or if you have any guidance for what that means for profitability, and also if you can talk about, if you have cash needs, what you might, if you were going to raise capital, what that would be used for. Just give us a picture on all that if you can.
Sure. We've given a framework for our business model going forward, because we do think we have the main OpEx base that we need. But of course, you do need to invest as you grow. So what we've indicated is about half of incremental gross margin dollars will throw to the bottom line, and half will go into operating expenses. So if we grow 30 million on the top line and our gross margins are running in the high 30s percent there, around $10 million of incremental gross margin dollars, about half of that would go to the bottom line and about half would go into OpEx. So that's on the P&L structure side. We don't have big investments in OpEx, like the doubling of the sales force that I talked about. That's behind us, but we will need to keep growing as we grow. And on the cash side, we certainly believe we've got all the working capital headroom we want. We paid off all of our debt. We're totally debt free. We had some long-term payment obligations from acquisitions like 10 years ago. Those ended at the end of last year. And so, there's no cash being used for interest servicing. There's no cash being used for long-term debt obligations. It's purely working capital. We've got just shy of 30 million of cash in the bank. And so for a business our size, that's more than enough. And should we ever need it, we also have a line of credit of another 15 or 18 million.
Nice. Good to hear. We got just a few minutes left. I know there are a couple items. You create NFC software developer kit. I don't even know what that is. So if you'd like to tell us about that.
Oh, absolutely. In addition to going after these elephant projects, we really want to be the go-to company for every creative RFID idea out there. And so we launched a developers kit, which costs $10, so it's nothing, but we didn't want to give it away for free. You still have to give us a credit card and buy it. And it's got sample tags in there. We have a GitHub repository that has sample code for the data structure, that has sample code for mobile apps. And so if somebody has a cool idea, they can just prototype it themselves. And one of our differentiators is we are happy to do small production runs. So we can even do a few tens of thousands of units for small ideas and get them going. And we want to block out everybody else from doing that. And then our approach to it, of course, is, if someone is asking a question and, they come from medtronic.com, they're going to get a direct call back and our engineer is going to support them. If they're from, some university somewhere, a grad student, they're going to go into the developer community and they can all, talk and use the chat boards and sort things out. But what we want to do is become the go-to company for anybody, creating innovative ideas for RFID, and our developers kit's the way to do that. You get it through our website right now. It's very slick and clean, and we've had a lot of great feedback from it.
I got to maybe look at this on my own, but how does that help you?
If you've got an idea for an RFID use case, some of the soccer teams are doing for engagement with their consumers, and you want to have something embedded in one of your products that someone can then get a unique experience with. We did this with Nike Connect years ago with basketball jerseys. So, you could get a LeBron jersey, you could tap it with your phone and you'd go into LeBron's personal social media feed and know where he goes for a beer when he's in San Antonio. If you wanted to create that kind of an application, you grab our developers kit, you can write the specific code for your use case. You already have code for a mobile app, so it can show up on the phone, and you have all of the interaction code you need to tap the device to program it so it creates the experience that you want to create.
Okay, great. Last one we didn't cover. If you could do it quickly, new CFO. Tell us, and added a general manager and vice president.
Justin Scarpella is terrific. He comes to us from SpaceX, and before that from Broadcom and MaxLinear. So very much knows both cash intensive, high growth, high pressure environments. And also knows the semiconductor industry very well. And that's a lot of business model that's similar to us, where you have to get design-ins, developers kits are familiar to him, and how you grow from there in the economics. EY background, so audit, very deep. So he's going to take great care of us from a financial management, audit, and compliance perspective, but he's also very growth and business enabling oriented as well from a financial planning analysis. So just a terrific guy, and you can look at his background on LinkedIn as well. But great profile for us for the growth phase. He was at MaxLinear when they went from 100 million to 400 million, and that's exactly the growth path that we're on. And he was at Broadcom going from $1 billion to several billion.
Awesome. Stephen, that was a great update. I don't know about you guys watching here or watching on YouTube later, but this is starting to look more and more like an investment to me rather than a trade. We're story trading, but I've held some shares continuously from $5, and I couldn't be happier, and I feel like a shareholder now. So I feel like a happy investor in this company, and maybe I'll pick up some more. We'll see. So Stephen, thank you for your time. Everyone else, if you can hang out just a minute, we'll go over some of our upcoming events and maybe talk a little bit about what you thought about Stephen's presentation. Thank you, Stephen.
Right. Thanks again, Ben. Thanks very much. Thank you, everybody. Bye.
All right. Take care. All right, real quick, if you're not part of the story trading community, you can become a VIP member and join us in the Identiv research group, where we collaborate together. Upcoming events, we got a ton of them, man. Tomorrow, we are interviewing the CEO of RELL, RELL Electronics. Going to be a real interesting event. Please follow us on YouTube and on Twitter. And with that, we're going to have a discussion with our VIP members. Thank you, everyone, for joining us.